Hi, everybody. Hope you're doing well. Today, we're going to cover the Triple Q for November 16th, 2020. Let's just get into it. What's the net? This week, we feel there's going to be a small bull. There's finally some more positives, mostly for the market, than negatives, or more specifically for the Triple Qs. Triple Qs continue to do the rapid growth. Hiring continues, growth continues. So those things are looking good thus far for the Triple Q. So we'll get into a little more details about maybe some concerns. Stock volume starts to normalize. There's been a bunch of ups and downs over the last couple months, to say the least, but it looks like it's kind of flattened the curve a little bit, which hopefully means a little more predictability. Fourth quarter growth, I said again, looks very good. Only concern is that it's 4.2% from an all-time high, which is never good from the standpoint of room to grow. So that's a concern. The other is the macro conditions. While some things have stabilized, some things have gotten a lot worse. So just be aware that there's macro conditions that are pushing down the general economy. I think those conditions are good for the Triple Q, especially the stay-at-home tech stocks that are now becoming, again, important. So for the Triple Qs, it should be good conditions, but the general market may go down because of the macro conditions. So you got to be aware of that. So who's announcing this week? NVIDIA. So good things about NVIDIA. They make up 2.93% of the total Triple Q holding. So if they have a good day, there may be some movements. They're at a 52-week high. Expectations are high. Stock is high. Option cost is high. So the question is, how much room is there? I've asked that question 3 years ago, and it continued to go up. So NVIDIA, very strong, especially with their acquisitions. Workday, on the 19th, they only make up a third of a percentage point. So if they do bad or good, it won't have really any impact on the market. A lot of concern here. Stock price is outpacing growth. There's no unusual option activity. Analysts are expecting it to go higher, but frankly, we just don't see it. They're not growing as they once have. Certainly from 2 years ago, they seem to be less growth. So that's certainly a concern. Either they've tapped out their 2 primary or 3 primary spaces or are looking to do an acquisition, but they seem to be flat at best. Splunk is good. There's not any unusual activity here option-wise. The space has been mixed though. Fortinet did well, IBM did poorly. Splunk is probably something that should do fairly well. But again, the stay-at-home stocks, this is part of them. So it could change from green depending on what happens at the beginning of the week. But they only make up 0.25% of the total Triple Q. So not a huge thing depending on how they do. Next week, analog devices in Autodesk. Analog devices for their Q4 looks like they're going to smash it. They haven't ramped up in a quarter that much since 2013 when we first started to track them. So they're looking very good. Their initial quarter may be good to a little bit of a bump, but it seemed pretty flat for their Q3, which is being announced on November 24th. But their Q4 ramping like we haven't seen for 7 years. Autodesk, huge concern here. If you have an investment in it, our recommendation is to be concerned. They're in decline. There's a lot of unusual put action on them for the March and April 2021 expiration dates at the 170 strike price, and it's in the millions of dollars range. So somebody or some people are making big bets against them. Based on our own data and the growth of it, we would agree with that position. So Autodesk, big concern if you have a position with them. Again, that's our data analysis, and it's more of our insight into it. You may have a different view. So if we look at unusually high option activity for the previous week, or specifically Friday, November 13th, Qualcomm and Merit were the 2 biggies, both at puts. Qualcomm for the June 18, 2020 expiration date at the 135 strike price. A lot more volume than interest on that day, and the volume or the total trade cost was about $422,000. Marriott, June 21st, 2022, 95 strike price. Again, more volume than interest for $1.1 million worth of trade. So somebody's making a big bet against Marriott, and I'm assuming it's because of the stay-at-home and the macro conditions that are going to impact Marriott for sure. Let's look at historical stock prices. Again, what we've seen is there's a huge ramp through August, and then we've seen the decline since then. For the FAANG Plus, for those that don't follow us regularly, certainly we feel there's a difference between the FAANG Plus and others. FAANG Plus roughly makes up 65% of the total holdings for the QQQ, and that's only 15 companies. So those 15 companies move the entire QQQ. They're the obvious ones: Amazon, Apple, Facebook, etc. So they dominate it. So when they move, everybody moves. And you've seen that for the last month or last couple of weeks, they've been on a general decline. So that's kind of pushing down the QQQ for the big ones. Again, Amazon, Facebook, etc. The non-FAANG pluses have actually been doing pretty well. They've been on a normal, steady increase since the beginning of the year. Of course, they had the bump down in March. This could change, and as we saw in the latter half of last week, it dipped down a bit. Historical stock volume, again, it's started to normalize from the wild swings from March and August. So hopefully that stays. Option traders obviously love a lot of volatility, and that's great. But hopefully it's stabilizing because of the macro conditions. 30-day long, or I should say certain macro conditions have stabilized. 30-day long option historical volume, heavy towards puts for the non-FAANGs, pretty steady, consistent between puts and calls on the FAANG Plus. So in the last month, we've seen a huge ramp in puts on the non-FAANGs, which makes sense. Those are the ones that may get impacted by some of the new macro conditions, the stay-at-home orders and that kind of stuff. FAANG pluses tend to do a little bit better in that. So they have a little bit more of a balance between them. Year-to-date call versus put predictions. Calls are trending up and puts are trending down. That's mostly to do with our Q4 assessments. So based on what we've seen thus far, now that could certainly change with the new macro conditions around the stay-at-home orders. It looks very good for Q4. Very positive growth, very high growth. Most of them are exceeding what they were doing in the January, February time frame before the slowdown. 30-day predicted bear versus bull. We see that there's more bull activity in the next week or so. So a little bit of a small bull, not a massive bull. You can see that in the orange, that calls are starting to go up and puts are starting to go down. So we predict a little bit of a bull this week. Predicted stock price, general trend with a small bull going up. The non-FAANG Plus is flat, relatively flat, a little bit going up, but the FAANG Plus is, especially with the Q4 growth, we're predicting in the next 30 days to 45 days, they'll continue to go up and should have a good Q4. Thus, this data is pointing us to a small bull for the week of November 16th. Thank you for your time. If you have comments or feedback, we'd love to hear from it. And if you like this material, please leave a like or subscribe to the channel. If not, happy trading.